Manufacturers Association of Nigeria has urged the federal government to prioritize industrialization, cautioning that the recent rebasing of Nigeria's GDP should not be misinterpreted as genuine economic progress. MAN's Director General Segun Ajayi-Kadir made this known in Lagos while reacting to Q1 2025 GDP growth of 3.13%. He noted that while the updated GDP data driven by agriculture, services, and the informal sector suggests a statistically larger economy, it does not reflect stronger productivity or industrial development. Ajayi-Kadri warned that real growth remains weak, averaging just 1.95% between 2020 and 2024, underscoring the fragility of Nigeria's productive base and the need for a robust manufacturing revival. Dr. Femi Egbesola, President, Association of Small Business Owners of Nigeria, joins me now. Thank you for joining us. Yes, a pleasure. And I mean, there's been a lot of conversation around this rebased GDP. It'll be interesting to get your perspective on whether or not it reflects Nigeria's economic realities, especially and more specifically in manufacturing and industrial output.
Of course not. It does not. Really, while it appears robust on paper, meaning that Nigerian economy has grown on paper, but in reality, it is not. It is not. It does not support the realities we have around. And it's like building a house, a very beautiful house, on a shaky or faulty foundation. Of course, the house will not be sustainable. We really need to work more on improving productivity, improving making ease of doing business possible for manufacturers, because that is the real economy, the real engine of growth, and that's the real sector that everybody must put hand on deck to make sure that it grows. With what we have now, with the rebased we have now, it is only showing that while we may look large in the economy before the world, but then at home, we have structural issues, productive issues to deal with. And it is important for us to begin to. If not, we're going to have lower production, lower manufacturing. And what that means is that Nigerians will need to depend more on the products, and we have lower production. It also means that we will become import dependent, and we are going to have fewer jobs, meaning that Nigerians will not have the jobs out there. At the same time, too, it also means that we'll be living in delusion, and that's not just too good for us. We need to face the reality. And the industrial sector, particularly the manufacturing sector, is dying by the day. The latest statistics shows that between last year and today, the contribution to the GDP dropped from 15.2 to 8.5, and that's a big drop. So if the manufacturing sector is contributing less to the GDP, and we now say that the GDP is being blown up, then there's a mismatch in there.
Indeed. And I mean, looking at the GDP numbers, we're seeing that agriculture, services, informal sector contributed or were the main drivers for the latest rebased numbers. It's interesting to see that manufacturing is not in, that category. So why would you say Nigeria's industrial sector, particularly manufacturing, has continued to underperform despite, positive GDP figures?
Well, the reality is that the present policies, the present realities, the business environment is not really supporting manufacturing, and that's why we have that a deep dive in the contribution to the GDP. And of course, if you look at manufacturing sector, they are the one that actually stimulate growth in the entire economy. When it comes to agriculture, it is the manufacturing sector that use many of their raw materials or byproducts for their production, and it happens also across the value chain. Manufacturers use a number of these products that are being produced in other sectors to make a products that are possible for us to consume in the country. So if the manufacturing sector is not growing, in a way it affects every other sector. And that's why it is important for us to begin to look at how we can begin to incentivize that sector to be optimal in performance. And that's what is the global practice. So government needs to begin to look at how to improve ease of doing business, so that manufacturing can come up to its rightful place in the economy of the country. And one way the government can do is by facing reality instead of just going about replacing the numbers. We don't need statistical growth. We need real growth in the country. We need government to begin to look at how they can fix infrastructure this time, particularly our roads, our ports, and perhaps to our rail system. It's important for us to begin to. Government needs to begin to look at how to make access to finance possible for manufacturers. Not just access to finance, long-term finance at affordable rates. That's also important for manufacturers. We also need to begin to look at electricity too. We need constant electricity if manufacturing would come to do what they are expected to do in the economy. We also need to begin to look at how we can support manufacturing with enabling policies. Many of the policies we have at this time is anti-manufacturing. We're happy that this time government came up with the Forced Nigeria Bill, which means that Nigerians must buy Nigerian products. But then again, how do you buy Nigerian products if really the manufacturers are dying? If the products are not there, how do you buy? It means that consumers will be forced again to do importing or buying imported. It's also a mixed match. So it's important for us to continue to match our policies with realities on the ground and look at we can improve on what we have so that eventually we're not just be attracting investors just because we have the statistics of the big books, but because we have the enabling environment that those investors will come into and make their money and be happy that they're investing in Nigeria. If not, they will either not come, or when they come, they will not stay for long.
So, I mean, there's a lot of intervention needed there in terms of infrastructure, in terms of policy, as you have highlighted. But one cannot ignore, the optics altogether, especially with the recent review of our growth rate in Nigeria from the IMF and even the recent GDP numbers. How would you say these numbers, and I know you have said that numbers aside, let's face the reality, but we know optics matter, right? So how would you say that the optics so far are influencing or affecting investor confidence or even access to financing for manufacturers?
Well, if we really want to grow our economy and we want to be serious about it, it should not just be about pleasing IMF or the World Bank. It should be about fixing our economy, fixing our microeconomy, fixing our macroeconomy. We cannot be basing our economic growth on trading. Trading is not sustainable. Trading will not continue to be able to solve our problem because it means we will continue to be import dependent, and that's not good. We should build a country. We should be able to build an economy that will not be consumable economy, but producing economy. That's a sustainable way of running the country. We just must produce more than what we consume. If we continue to work on trading, base our GDP on trading, then it will mean that we will continue to produce less, consume more. And that will affect inflation the more. It will continue to also weaken our naira and will make us less competitive in the global market. We just must work hand in hand to ensure that while we are owing other international countries, while I also want to take advice from the World Bank or from IMF, we should also be ready to face the reality and ensure that our economy grows by growing the manufacturing sector.
All right, thank you very much for your perspective, and hopefully we see that needed investor confidence boost within that sector. Thank you so much for your time, Dr. Femi Egbesola, President, Association of Small Business Owners in Nigeria. All right, we move now to a live coverage of the book presentation of Esema of Benin, Chief Gabriel Gbinedion. The book is titled The Chronicles of a Legend. We cut now to the live coverage.
The representative of the President of the Federal Republic of Nigeria, he is the 21st Secretary to the government.